Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka. It was a good day of trade. Yesterday we ended at the day's high. Today as well, good traction. Of course, no big gains, but we have managed to hold on to that 24,800 mark. We'll be talking about the markets and a whole host of stocks that are on our radar. But let me first bring on board my colleague Yatin Mota. Yatin, good day of trade. Yesterday, of course, we ended at the high point of the day, and today as well. Extending those gains against the backdrop of positive global cues. Of course, we had the Fed minutes coming in last night, and it has a dovish undertone. Most of the members believe that a September rate cut, should happen, and that's something that cheered the bulls across the globe. And India, of course, was no different. Broader end of the markets continue to do well. 24,800 on the index. Of course, that has we have held on to that, although we were off days highs. But mid caps have outperformed today, and in terms of breadth also firmly tilted in favor of gainers. 3:2, that was the NSE advanced decline ratio. In terms of sectoral performers, banks, Yatin, made a good comeback today. Banks have time and again failed to hold on to that 51,000 mark. Today as well, I don't think it hit that 51,000 mark, but it did manage to recover quite a bit, 300-point gain on the Nifty bank index. Aside of that, what did well, Yatin, was metals, FMCG. The FMCG did well yesterday also, and realty is the other pocket that did well. What did not do well was the defensive pocket, IT, pharma, and autos as well. Some of the auto names like Tata Motors, M&M were among the top laggards on the Nifty. Yatin, let's talk about some of the gainers in a bit, but there is some source-based news that I saw on Awaz that Adani Group is looking to sell some stake in two of its group companies. Tell us more about that.
So, Nandita, sources close to the transaction indicate to CNBC Awaz that the Adani Group promoter entities are all set to sell up to 5% stake each in Adani Power as well as Ambuja Cements. Obviously, this is to deleverage the promoter balance sheet, and after the Ambuja Cement acquisition and the leverage buyout, we have seen funding coming in from the foreign banks. So probably the proceeds from the transaction are most likely to be used to repay those, debt structures which are already existing. Remember, the Adani Group after the Indian crisis has sold their stake to, entities like GQG. But then again, the promoter entities bought shares from the open market. So there is some bit of, leverage at the promoter group entities, which probably would be more or less be paid in part or full post this transaction, which is valued close to 15 to 20,000 crores as per the current market price. So let's see when these block deal happens, because the Ambuja Cement and the Adani Group have not commented on the story. But yes, most likely a block deal or offer for sale is the most likely outcome when it comes to promoter stake sale in Ambuja Cements and Adani Power.
Well, that was about the Adani Group of stocks. But before we come to mid-caps, I think just want to point out the gainers and losers on the Nifty in today's session. You had Grasim, Tata Consumer, Airtel, Tata Steel, ICICI Bank, some of these names doing well. What didn't do well was, of course, Tata Motors and M&M, as I had pointed out. Some of the technology names like Wipro, TCS were among the laggards, and so was NTPC. Aside of that, even the likes of ONGC, Power Grid, Sun Pharma, these were some of the counters that didn't do well. But Yatin, quite a few stocks buzzing across the broader end of the markets, right? Varroc was up quite a bit, so was Kalyan Jewellers, which of course I'll be talking about in a bit. But what were the other movers?
So, Jubilant Ingrevia, we have ACI, Raymond, all of these stocks were buzzing in trade, 7-8% gains coming in from all these stocks. In fact, if you look at the top gainers, we also had Natco Pharma, which has hit a fresh 52-week high in trade today. RCF, Jindal Saw, APL Apollo, IndiGo, after the brokerage upgrade, has also seen some good momentum. What did not do well after a gap up is Paytm. After opening 3% higher in trade, the stock fell 3.5%. So intraday 6-7% decline. There is a buzz in the market that Alibaba might sell a stake here via block deal. So probably that stock was under pressure. We had Adani Wilmar, KFin Tech, Sunteck, Realty, all of these stocks witnessing some bit of profit taking. But clearly, stocks like Jindal Saw, Balrampur Chini and Trent continue to be trader favorites, and all of these stocks hitting fresh 52-week highs.
All right, those were some of the movers and shakers. But what was a high flyer in trade today, of course, as pointed out by Yatin also, was IndiGo on the back of brokerage upgrades. Remember, the company has launched the business class service on its 18th anniversary. IndiGo Stretch, it's a new tailor-made business product. The new service, of course, will be available from November. Bookings, however, have already started for business class tickets, right? This now marks a significant shift for the airline, right? Because till now, since inception, it was known to be a low-cost, no-frills airline, but now it has entered into that segment where, Vistara and Air India have been enjoying monopoly, right, in terms of Indian airlines. So here, that monopoly will end, and IndiGo, of course, has made that entry, and which is why some of the brokerages have upgraded the stock. If you look at Jefferies, it has upgraded IndiGo to buy. Target price has been raised by as much as 18 to 19%, from 4,400 rupees to 5,225 rupees. Jefferies, in fact, has also pointed out that the operating performance of the airline has been improving, and it has actually surprised in the last 12 to 18 months. In fact, market share data for July had come out. In June, the airline had lost some market share, but
Correct.
now it has again managed to gain market share in the month of July. So operating performance has been well. In fact, Jeffrey says that the IndiGo remains in the driver's seat with new avenues of growth. Of course, one new avenue being the business class, entry into the business class segment. It has maneuvered cost as well as capacity constraints pretty well. That's what Jeffries has to say. And the recent efforts to increase supply have also gained momentum, and it has contributed to the overall stability of growth in the market. In fact, Jeffries has raised the earnings estimate and spreads estimate by 6 to 7% for FY26 to FY27. There's another very good report on IndiGo by HSBC, wherein it has retained its buy rating. It has a target price in excess of 5,100 rupees on the stock. It has pointed out, of course, that the business class entry will end the monopoly for other airlines like Vistara and Air India, although it won't really be margin accretive in the near term. But it will strengthen its position and reduce the leakage of corporate seats, right? Corporate traffic, so to say. And it is positioning this business class product to the premium economy of Vistara. Aside of that, the loyalty program as well as strong network and corporate market share, these are some of the factors that could support its premium products going forward. Of course, the first business class flight will be available from November between Delhi and Mumbai. And bookings, of course, as I mentioned, has already started. IndiGo flights will have 12 business class seats in the beginning in the aircraft, and curated meals, of course, will also be served as part of the new future. If you look at the stock price, Yatin has done fairly well on a YTD basis. Of course, 50% kind of gains, and in the last 1 year as well, 81% kind of gains. So it has been a high flyer, and third quarter, Yatin, mind you, is mostly a very strong quarter, seasonally strong quarter for IndiGo. Now, with the addition of the business class, let's see how things really pan out for IndiGo.
Yeah, and I think brokers have indicated that probably in the shorter term there could be pain in terms of the overall margin performance and the profitability. But yes, from a no-frill airline to a full-service airline, given the fact that competition is evolving, customers are evolving. So, it's not the price point that, really matters now for Indians. I think everybody is looking
more
for luxury
options.
and options as well as, that particular private corner in that aircraft, because I'm sure with Vistara and Akasa, giving those business class options, the choice of better customers, corporate customers were those airlines. But anyways, moving on to companies like Shyam Metalics, which were in focus, the shares surged over 10% in trade today after UBS initiated coverage on Shyam Metalics with a target of 1,200 rupees per share. 1,200 per share target implies a 60% upside to yesterday's close of Shyam Metalics, and clearly that stock ended at the day's high. Now, UBS believes that the company is moving up the value chain from being a commodity player. They are trying to value add in newer product ranges. Probably that will be margin accretive. In fact, we have UBS, which believes that from here on the return on capital employed will move up from 20 to 23% to 28% in the next 2 financial years. To a substantial 5% improvement in return on capital employed as new projects start, yielding benefits for the company. And most importantly, they are expecting a EBITDA CAGR of nearly 40% for the next 2 to 3 financial years. So, on the basis of earnings, value-added products, and better valuation multiple, UBS is expecting a more than 50% upside from the current market price.
All right, of course, 60% upside, that's what UBS is watching out for on this particular stock, and 6% higher in trade today, Shyam Metalics for you. But the other stock that was dazzling and how was Kalyan Jewellers, right? 10% gain coming in there, double-digit gains. The stock zoomed post large block deals. There was a block deal where multiple block deals rather, where 6.5%, almost 6.5% equity exchange hands at 539 rupees per share. Of course, Warburg Pincus affiliate Heidel Investment has sold stake to promoter, according to sources, and promoter group may have bought somewhere around 2.36% stake. Of course, promoter group shareholding would go up to somewhere around 62.95% or nearly 63% vis-a-vis 60.5% earlier. In fact, Heidel Investment's holding in the company was a little over 9%. Now that holding, of course, will come down. But Yatin, if you look at the holding structure in the company, so to say, the FII holding has reduced pretty sharply in the counter, in recent quarters. At one point, the FII holding was somewhere around 30% or so. It has come down to 21% or thereabout somewhere by the end of the first quarter of FY25. But on the other hand, you have domestic investors. They have steadily raised their stake to 11.5%, almost 12%. That was at the end of the June quarter. But if you look at the performance of the company as well, both revenues and profits were in excess of 20% or thereabouts in the first quarter, and the stock has done fairly well if you look at the other jewelry stocks compared to that. I think PC Jewellers is the one that has really outperformed so far in 2024, but this one is a close second with a gain of somewhere around 60% or thereabouts on a YTD basis. And the interesting part is that there are 7 analysts who are covering this stock, and all of them have a buy rating, and the consensus price target implies an upside of somewhere around 6.5% from current levels. But in the last 15 months, the stock has gone up 440%, if I may say so, and the last 3 months itself, the stock has literally doubled. So now promoters buying stake, that could instill more confidence in investors. That could see more buying going forward, Yatin.
Absolutely. And the most important part, Nandita, as you mentioned, that despite the rally in the stock, the promoters have increased the stake, and more or less, I think the bulk deal data which comes in after 6 p.m. on stock exchanges would reveal which are the institutions which participated in the block transaction today.
Well then, those were all the stocks on our radar this afternoon. Good day, stable day, so to say. And tomorrow, of course, is the important Jackson Hole speech. And of course, the Fed minutes had a bullish undertone. But the Jackson Hole speech by Jerome Powell will provide even more clarity as to what is the quantum of rate cut that one can expect, because the chances or probability of rate cut according to the Fed Watch tool, the CME Fed Watch tool, has gone up in excess of 60%. Absolutely. Now it's a question of how much will the Fed cut rates by, whether it's 25 basis points, 50 basis points, or what. So that's something that of course we'll be watching out for tomorrow. But with that, I think we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in, but you guys stay tuned to Money Control for all your other news and updates.